Hey everyone, it's Rob Roy, and welcome to the Elliott Options U.S. Market Update. If you've been watching this for a while, you see something a little bit different. I am back in the mountains in the Appalachians, but without the Chuck Norris hat, and that's in honor of a very good friend of mine that I lost this week to unexpected heart attack. Good golf buddy from a long time, going to a life celebration afterwards, so no Chuck Norris hat today out of respect. So, taking a look at the market, you'll see on your screen the stocks that we will be looking at in today's market. Another quick note, we are recording this just before the market close, so there may be some slight changes from the charts that you see here. But as a reminder, if there's a particular stock you're interested in, you can go directly to it by clicking on the chapters feature in the recording. All right, so taking a look at the S&P, you can see we had this big vertical move to the upside. We've been talking about this for quite some time, where we came down and hit that 161.8% extension on the zigzag and then rocketed to the upside. We talked about that last week too, and the moonshot, if you will, has continued. You've been watching before, you know that I just don't like when things go vertical. Makes me a little bit nervous. I thought we might have a little more resistance here at 440, but we didn't. So what happened this week to drive the market continuing higher? Well, we had the CPI report that came out, and that was tamer than expected. In fact, the core CPI was at its lowest level in 2 years. So that gave the market a bit of a boost, and off we went with the big gap up when that was released on Tuesday. And then Wednesday, we had the wholesale prices, which is the PPI, and that was lower than expected as well. And that's important because that's the wholesale prices. That's when you are creating something or buying something, selling something. If your wholesale prices are not coming down, but the consumer is not paying as much. In other words, inflation's coming down on the consumer side, but not on the producer side. Well, then that compresses margins. So it was helpful that the PPI and wholesale prices were lower as well. And then the fact that we've had this, and last week we talked about Jeffrey Gundlach and Bill Gross both forecasting recessions. You've seen all kind of comments on recessions. The market is trading as if there's going to be rate cuts next year. In fact, they are already factoring in 100 basis points of rate cuts next year. That seems like a little aggressive. And yeah, I do believe that we'll likely see a recession as well. But is the Fed going to react that strongly? They seem more intent on making sure, doubly sure, they don't mess up this inflation thing. So I'm sure they like the numbers, but are they going to cut that much? That could be a disappointment for the market. And so when we come back and look at the chart, we've got these gaps, and there's now 3 gaps in the charts, as you can see here. And we are getting up towards not too far away from the highs in July. We've gone a little bit sideways here. Slight up day so far. We'll see if that holds. We do have a holiday shortened week coming up next week for the Thanksgiving holiday. An old expression, never short a dull market, meaning that when volumes are lower, the markets tend to drift to the upside. But the other side of that is when volumes are lower, it can create additional volatility. So it doesn't necessarily mean we're going to go higher next week, but it wouldn't be surprising other than the fact that we've had this vertical move in all these gaps. So I wouldn't be surprised if we had a little bit of volatility next week and start to come back down, at least down to this 440 level, and fill that first main gap. And then we'll see where things go from here. But I know a lot of people are talking about the seasonality in the markets, and how between now and the end of the year is traditionally a bullish time of the year, but not always. A few years ago, the market bottomed on Christmas Eve, so we don't always move up this time of the year, but it is a seasonal trend that a lot of people take a look at. All right, so the bond market, taking a look at the TNX. And you can see this move to the downside. Now, we had a comment of your straight moves to the upside on the bond market, and the dollar seem less likely to occur. And I just want to stress that these aren't my forecasts. This is an Elliott wave algorithm programmed from Profit Source is the name of the program. You can find out more information about it at hubb.com. But this is a software program programmed exactly to the algorithm as Ralph Nelson Elliott wrote it. So the software is labeling it. I'm just trying to interpret it and analyze what it's showing for you. So these are not my levels. And the other thing to remember is there currently is not a big move to the upside forecast. We're in the wave 4 right now. So we are in corrective mode. Now we are nearing a 38.2% fib level, which could hold, and then we could turn back to the upside. We'll see how that plays out. But this is what's helping the market move to the upside. And we talked about this Tuesday night in our Tradefinder broadcast, which we do, by the way, every Tuesday night at 9 p.m. Eastern Time. Register on the link that you see on your screen. We talk about the markets. We look for trade ideas, and we have a live Q&A. We have a great community of traders. They ask great questions. Love to have you join us. So if you haven't before, go ahead and register and join with us this coming Tuesday. We talk about all these kinds of things. We also had a conversation of, this is surprising me a little bit, the dollar backing off like this. That seems to indicate more on the economic weakness side of things, but a lower dollar and interest rates coming down. Then we got the tame CPI and PPI. You can see we had all the pieces in place for this market rally that we've had to the upside. Now we're nearing a 50% corrective move in the dollar. So you get the dollar down and you get interest rates down, and coming off the 161.8% level. Now you can see why we've had this rally. But can we continue to rally from here? I'm suspect of that. We're just a bit overdone. Looking at the 10-day moving average, even going sideways here for a few days, we're still separated from the 10-day moving average. So it's going to be really interesting to see how that plays out throughout the rest of the year. Looking at the Qs, and take a look at the Qs. Very similar. They're a little bit ahead. You can see they're already up to their July highs, and that would be expected with those big tech stocks, the Magnificent Seven, having another interesting run. Now, a couple things that I wanted to mention here. First of all, note that on the Qs, there's no 5-wave impulse pattern labeled, and there's no 5-wave impulse pattern labeled on the SPY either. It's not that I have it turned off. It's just not qualified for a 5-wave impulse pattern, which means this move here is a new impulse. Now, is it a zigzag? What kind of an impulse move is this? And the hardest impulse move to figure out is the A wave. Now, once the A corrects and we start into the B wave, then we can start looking at fib levels, etc. But it's difficult to know where this will end. But the one thing we do know is that some sort of a corrective move is likely to come. And I think in the not too distant future, once again, the Q is pretty vertical on the move to the upside and right at those July highs. As I said, a little bit ahead of where the SPY is. And we take a look at the Russell, and the Russell is in a 5-wave Elliott wave impulse pattern to the downside. So you can see this bounce up here from very close to Armageddon, Katie bar the door time down here around the 165 area. If we hadn't held there, it was, look out below. But we bounced, and in the wave 4, we're right at the 61.8% fib level. Once again, gapping up, going vertically, and you can see that it's a pretty well-formed 5-wave impulse pattern to the downside. So it does look like the IWM wants to come back down. Can we break 165? It looks like the algorithm likes the price somewhere just above 150 by the end of the year on the IWM. So we'll see if that works out as well. Also wanted to show you on one of our international markets, the INDA for our friends in India. Pretty impressive move here. Also labeled in a 5-wave impulse pattern, this one to the upside. And you can see the wave 4 came right exactly to the 38.2% fib level. So this is why we look at these things, because they work. Bounce right off that fib level, and we're right back up here to 45 on the INDA. So can we break above that level? If we do, then perhaps the INDA does move up and hit this wave 5 target. The question is, can the INDA do that if the U.S. markets do pull back a little bit from this vertical run over the past couple of weeks. That's the one question that I think we need to consider and take a look at. Some stocks of interest. Alibaba was in the news on the fact that they're not going to bring out their iCloud to the market, and so the market didn't like that. But look, once again, so we have this news that they're not bringing their cloud services to the market, and we retraced right at the 38.2% fib level. So we had a wave 4 corrective move right to the 38.2% fib level, and then boom, down we went. Now that's kind of a vertical move to the downside, so maybe Alibaba calms down a little bit, but you can see there's some follow through today to the downside as well. And it looks like the wave 5 wants to bring Alibaba down to around 72 or so. But isn't that interesting that that kind of news comes out? And that's the thing that makes you scratch your head on all this Elliott wave Fibonacci stuff. How did it know, or did it know? But is it a coincidence? But you have a doji here, right at the 38.2% level, and then that news comes out. Pretty interesting stuff. Walmart also in the news. They had a pretty decent earnings report, but they said that they're concerned about the consumer and the holiday spending cycle. And big move to the downside on Walmart, brought a lot of the retailers down, as I'll show you with Costco here in a second, but big move to the downside. Now, the key here is that we're all the way very quickly into an area of support there at 155. That wave 5 was getting awfully extended on Walmart. And just as a reminder for those of you that may be newer to Elliott wave, if the wave 5 goes past 100%, you don't look for a retracement back to the previous 4. You look for a retracement of 61.8%. So we draw our fib retracement lines and look where we are. Again, this is why we look at this stuff, because it works. Walmart comes out and says they're concerned about the holiday spending quarter, so they kind of warned on moving forward, even though they had a pretty decent quarter. And there we go, right to the 61.8% level here on the corrective move, exactly what it's supposed to do. So perhaps Walmart, maybe that's the end of that, with the support there at 155 going all the way back to the springtime. As I said, Costco got kind of caught up in that, but it had also gone vertically up. And so it was looking for an excuse to come back down, I think, and Walmart gave it to it. And so back down here to test this area in this 580 level. You can see we're right on the 10-day moving average as we're trading today. We need to hold this level if Costco is going to turn and go back to the upside. Also, a pretty extended wave 5 there, though. So is that the end of the move for Costco, or is this just correcting this vertical move? What goes vertically up and comes vertically back down. So we're at an area of support. We're at the 10-day moving average. Next week's going to tell a lot as far as whether or not we can continue the move higher in Costco. Now, one that's not didn't get hit was Amazon. And you can see here the big daddy of the retailers is holding in a 5-wave to the impulse pattern or to the upside pretty well. But we are at a 61.8% extension in that wave 5. And it also happens to be right where that wave 3 high was back in September. So backed off a little bit, kind of makes sense. There's a pretty good area here. I think when we start getting some holiday numbers, perhaps the Black Friday numbers from Amazon, that's going to tell a lot as far as what these retailers do moving into the end of the season. Is Walmart right to be concerned, or were they just being a little conservative on their guidance? Well, I think, again, the early numbers that come out on Black Friday from Amazon are going to tell us an awful lot. And if they're positive, I think you see Amazon run up and hit that wave 5 high around 160. But it's also in an area that could act as resistance if those numbers are disappointing next week. Bitcoin just hanging in there pretty well with this run up past 35,000. So we're consolidating there. You can see we are in a wave 3 here. And again, as a reminder, this wave 4 is not saying that Bitcoin is in a wave 4. It's just saying if the wave 4 was to begin today, that's about where you could expect some support. So the wave 3 can continue higher. And if the wave 3 moves higher, then these projective moves change with it. But if that is the end of the wave 3 and we're in the wave 4, is telling you this is about where you could expect that 4 to label and find support before starting the wave 5. But Bitcoin hanging in there pretty well, consolidating this vertical move. I don't like that vertical move in Bitcoin there either. If you wanted an ideal consolidation following a big vertical move, this would be it, going sideways for a while. But you can see, even with Bitcoin in the past, when we've had these vertical moves, they do get a bit of retracement there as well. And so here, the vertical move there once again, and we retrace back down. You can see all these all over the place. So these are goals of why I like vertical, because they so often get retraced. So even though Bitcoin's holding in there now, you got to keep that in the back of your mind that every time it's done that vertical stuff, it has given at least some part of it back. We'll see how that plays out. Coinbase, I know a lot of you ask about that. Everybody asks about it on Tradefinder Tuesday night. That's a common one people want to know about. Even our insiders meeting for our alert subscribers only at ewotrader.com ask about it on Thursday nights. So yeah, you want to be part of the alert service, ewotrader.com. And right here, you can see we're at an area of resistance here at 100. Very nice move in Coinbase. It is still in a qualified 5-wave to the downside pattern, but barely. In fact, if Elliott was here, he'd say this pattern likely gets relabeled. Once something moves above 70%, the likelihood of it becoming relabeled, in other words, this 5-wave pattern disappearing, goes up significantly. The algorithm, Elliott did put a lot of weight in the fib levels. So in the algorithm, you can go all the way up to 78.6. That's why it's still labeled here. But in his notations, Elliott had a lot of rules and he had guidelines, things that he observed. And that's what I enjoyed reading, is his notes, not just the published materials. And he would say that when you get above 70%, there's a likelihood that it's going to disqualify. So if it does, we're looking at this as a new impulse coming off of this long level of consolidation right here at 70. But I think we nailed this one pretty well. We said as long as you stay above 70, stay long Coinbase. And if we could break above 80, we might have something going. And so far, that's panned out. Now, the only question is, can we break above this round number at 100 and move up and test those July highs around 110? Then it'd get really interesting to see what happens from there. So nice movement there in Coinbase. Oil, wanted to show you a chart of USO. This is one that if the consumer isn't going to be weak, it's going to be strong. Why is oil tanking like this? And I wouldn't be surprised if we don't hear something from OPEC soon, because they said they don't want the price coming down. And with this move lower here, they may start jawboning about cutting production again to get the price back up. They know that their supply is dwindling. They want to make as much as they can off of what they have left. The wave 4 here is right at the 61.8% level. So if oil is going to hold, if USO is going to hold and start back to the upside, this is a very logical place for that to occur. You can see we have support going back to April, right around the 70 level. And the 61.8% wave 4 in a very well-formed 5-wave to the upside pattern. So we had this zigzag down here. You can see the zigzag pattern right there. And again, if it's going to hold, this would be a place, though, maybe a little speculative position here on oil moving back to the upside wouldn't be a bad place, considering the fact that there's a lot of other things that aren't going so well out there. So looking at GLD, we look at the chart of gold through the GLD. People have been interested in that lately. We got to get above 185, and we just haven't been able to do it. Every time we get up to 185 and we even tried breaking it here in April and May, but did it vertically. So back down, vertically up, back down, tested it here in June, tested it in July, tested it again here in October, and now it looks like we're trying one more time. But for GLD to move higher, I've been waiting for a great opportunity on the metals for some time, but we got to get above 185 with follow through. to see if we can move higher from there. So I wanted to thank everybody for all your comments, and we did have the big celebration. Hopefully my voice sounds a little better than it did last week. And boy, after I recorded that, my voice was gone literally about a day or about an hour after that recording. I couldn't speak anymore. So leave your comments. What we're going to do is we're going to announce next week. We're going to start doing something every month as far as a giveaway. So keep the comments in the below the video. We enjoy having them. We enjoy the conversation, and I even enjoy when people disagree, as long as we keep it respectful. Let's make this a respectful forum here, where we can have disagreements and understand that that's what makes markets. And all I'm doing is trying to do the best I can to read what I see in the charts for you guys. So thanks as always for your attention. Have a great weekend. Have a great Thanksgiving, everybody. Hope you get to spend some time with family and friends, and we'll look forward to talking to you next week, Black Friday. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Tradefinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.